What I'll tell you about today is transitions back into gold production. It's step one of my project to get the business back to $1 billion valuation. This is the disclaimer and speed reading test. You should always consult a broker if you're going to invest. So as a bit of background, I'm fourth generation miner from Kalgoorlie. We started off, we developed a narrow high-grade gold mine that was owned by my father. We were mining sort of 12 gram dirt when gold was $550 an ounce. It finished at $850. We then bought, developed, refurbished Meekatharra, brought that into production. Gold price was about $1,100–1,200. We then developed the Mount Marion lithium project into what was the world's largest lithium concentrator and second largest operation. We did a staged sell down at that stage. We love lithium. The spodumene and having to sell to the Chinese forever just didn't enthuse us. We went into battery recycling, partnered with some Germans, built a plant for Mercedes-Benz, then had an unfortunate forced divorce, got our settlement, and now we're moving back into gold production. We think, the two thematics that, we're very, very comfortable with is gold. Once the geopolitical uncertainty sort of subsides, we think then the focus comes back to inflation. Inflation is going to be with us stronger for longer, which is bad news for all of us and good news for the gold price. So we have a camp scale opportunity up at Barrambie. It's sort of 40 strike kilometres, which is enough from Kalgoorlie to Kambalda, so a lot of ground. We've been able to secure a production joint venture to develop our first gold resource out at Barrambie. With pretty much no upfront capital to us, which works. It's a toll treatment and within trucking distance up in the Murchison. It allows our geos who have done a fantastic job, who have taken this asset from first drill holes in February last year to now a joint venture to develop it, and subject to the final investment decision towards the end of the year, will be in production early next year. So we think it's a great business to a great foundation to rebuild the business, to get that cash flow. And we've got critical minerals assets for growth in the long term. The transition to net zero, whether you believe it or not, it's going to happen. I mean, you have a look at the EV cars, you just can't ignore the economics. They cost, 10% of what an internal combustion engine. So, lithium and vanadium, two commodities most positively impacted by this net zero transition according to the International Monetary Fund, so we're happy backing that. I'll tell you about the Barrambie Gold and we'll just have a bit of a fly through and I will rest my gums.
Neometals' 100% owned Barrambie Gold Project is located between the Western Australia mining towns of Meekatharra and Sandstone. This prime location within the prolific Murchison Domain is a hub of active gold exploration, surrounded by numerous operating gold mines and processing plants. Having held the project since 2003 with a focus on its globally significant vanadium-titanium resource, Neometals has now recommenced active gold exploration for the first time in 20 years. Situated on a major crustal feature considered vital to the formation of the multi-million-ounce gold deposits of Sandstone and Youanmi to the south and Andy Well to the north. Neometals' granted and pending exploration tenure spans 357 square kilometres and covers 40 strike kilometres of the Barrambie Greenstone Belt. Flanking one of the world's highest-grade titanium deposits are several historic high-grade gold mines dating back to the early 20th century. Notably, the Barrambie and Mystery mines produced at grades approaching 1 ounce of gold per tonne, with operations extending to depths of nearly 100 metres below surface. Based on historical drilling from the 1980s and 1990s, in 2024 the company announced an exploration target ranging between 335 and 775,000 ounces of gold, which underscores the project's significant potential to host multiple gold occurrences. During 2025, the company completed successful RC drilling programs at several targets, including at the Barrambie Ranges Trend, Mystery Area and at the Ironclad deposit, which is currently being prioritised by the company for early development and near-term cash flow. Recent drilling at the Barrambi Ranges Trend, situated to the east of the large titanium vanadium deposit, returned excellent results in the area of the high-grade workings as well as along strike. This footage shows an approximately 1 kilometre segment of the Barrambi Trend, where the recent drilling returned results up to 5 metres at 5.6 grams per tonne gold, including 2 metres at 13.27 grams per tonne gold. Historic workings have been mapped along 4 kilometres of strike, demonstrating the scale of the target. The historic Barrambi Ranges gold mine produced over 15,000 ounces at 29 grams of gold per tonne between 1905 and 1911. This long section portrays a snapshot of the underground workings as they were in 1908. Also portrayed are the north plunging high-grade chutes recognised by the miners, which would have produced at many ounces to the tonne. Recent drilling demonstrated significant exploration potential, returning several significant results below these historic workings, such as 2 metres at 19.41 grams per tonne gold, including 1 metre at 38.4 grams per tonne gold, 2 metres at 11.75 grams per tonne gold, and 2 metres at 7.39 grams per tonne gold. This 1.6 kilometre segment of the 4 kilometre Barrambi Trend highlights the exploration opportunity, especially given the initial exciting results from our first exploration program, testing below the sparse, shallow historic drilling. Opportunities beyond the Barrambi Ranges include the Silver Lining and Kismet prospects, and the Ironclad and Mystery targets in the Sugarstone area, approximately 8 kilometres to the north of the Barrambi Ranges. Significant data sets were available from historic drilling, which was used to guide initial drilling, and in June 2025, Neometals announced an opening mineral resource estimate of 13,000 inferred ounces at Ironclad. However, recent infill drilling has increased the confidence in this estimate, and step-out drilling is helping to identify significant opportunity for further resource growth, such as 19 metres at 4.16 grams per tonne gold, including 9 metres at 7.19 grams per tonne gold, located down plunge of the near-surface mineralisation. The Ironclad MRE was updated in March 2026 and now stands at 285,000 tonnes at 1.6 grams per tonne for 15,000 ounces of gold. Significantly, 86% of ounces are classified in the higher confidence indicated category. Based on this updated MRE, the Ironclad scoping study outcomes include the potential production of between 10,000 and 11,000 ounces of gold via open pit mining and toll processing, and generating cash flows between $19 million to $23 million. The broader Ironclad Mystery Corridor has significant exploration opportunities, and initial drilling is providing similar success to that achieved at the Barrambi Ranges Trend, with exciting results such as 14 metres at 11.74 grams per tonne gold, including 6 metres at 26.56 grams per tonne gold, being returned from initial testing below the shallow historic workings. The Ironclad Gold project is well advanced, with next steps along the development pathway to include execution of key agreements, completion of remaining technical investigations, and submission of outstanding approvals documents. Gold occurrences are documented across the length and breadth of the Barrambi project, hosted in various lithologies and of multiple styles. This presents a wide array of targets in both established trends and greenfield settings. With such diversity comes opportunity, the potential for Neometals to build the Murchison's next camp-scale gold project.
Our strategy is, it's a big tenure package, so rather than spending tens of millions of dollars on exploration, we went out to the geos and said, look at the low-hanging fruit. What can we get into production quick, get into cash flow while the gold price is high, and we can explore later? And so that's why we started up at Ironclad, but a fantastic deposit in terms of the scale. There's abundant processing infrastructure. Our partner's actually got a toll milling contract at a mill, which is great. You can be 100% certain of incurring mining costs It's actually having a milling contract that makes the difference. And we've got lots of prospective satellites to extend the mine life. So we've done a joint venture with a company called BML Ventures. They're a very successful Kalgoorlie-based mining contractor. They've done a number of these. They did Jeffreys Find for Oric. They did a cutback for the administrators of Walloona and made $35 million each. They're doing Gold Arc at the moment. They're doing Lefroy. And so what we've done is we've demarcated a mining lease out. It's a 50-50 profit share, so they fund all the working capital. It's about $30 million is our estimate. They recover that, and then we split the profits 50-50, which we think is a fantastic endorsement of the project and the potential upside. So Ironclad looks like a mine from the 80s, right? Like, we've had this project for 20 years. We've been concentrating on vanadium, titanium. The prices were rubbish. We switched back to gold. And so you've got oxide material at the surface, very, very wide. It'll be a very easy open pit. So stage one is just a starter pit. It's the minimum that we could do with a couple of $1 million. So, you know, we'll take out about 10 to 11,000 ounces. We'll then get the drill rigs out there in the coming weeks to expand that and to push that deeper. That pit shell is about 12 months mine life. We want to extend that out to sort of 2 years mine life, and then to bring on a couple of satellite pits. We use pretty conservative estimates in the scoping study metrics, but you know that it's really just a starter to get us cash flow in stage one. So, you know, we've got more 1 gram material outside the pit shell than in. So it's a bit like shooting fish in a barrel to extend that. And we've got a fantastic pipeline of projects now that we will push from being prospects into being deposits, and then starting to evaluate them from mining. So that's stage one, get the cash flow. And the big growth asset, I think, is the Utah Brine project. So it's a strategic entry into a known lithium potassium basin in the USA, the Paradox Basin. It's the largest brine reservoir in the US. What we've been able to do is to do a deal where we now can access 23 inactive gas wells. We can sample the brines, we can use them for extraction. Previous explorers have proved that DLE works. We have deep processing experience with lithium, from upstream lithium, battery recycling, into lithium brine processing. We've piloted Rio Tinto's Rincon in 23-24, and we've got a commercialisation MOU with them at the moment. What we really like is, you know, Utah is it was number 1 ranked mining jurisdiction in the world in 2023. We have private land that's owned by our buddies that own this gas plant in the bottom left-hand side there. We've got high voltage power at between 2.7 and 6 cents a kilowatt hour, which is practically free when you compare it to Australia. And the gas is $1.50 a gigajoule, right? You can't even transport gas in Western Australia for that. And God knows what you pay here. So fantastic from an energy point of view, well aligned with the US critical minerals strategy. I was over in Washington 2 weeks ago. The guy said, well, you're the only project that we've seen that's actually got 2 of our critical minerals in it. And the US imports 96% of its potash and doesn't produce a lot of lithium. So we were able to do a pretty soft deal to come into it because of our background. So we own 51% in the tenure applications. Our partner based in Nebraska holds 49%. And for the well owners, they get a 2.5% to 3.5% royalty. And so at the surface, it looks like a desert. Unbelievable. Sealed roads to site, but there's this fantastically thick body of water. And it's about 4,000 to 5,000 feet thick. We put out a mineral resource, a JORC exploration target. Was about 6 or 7 billion tonnes of brine containing 1.9 to 6.5 million tonnes of lithium carbonate and a couple of 100 million tonnes of muriative potash. So, you know, you've got a natural resource there that has, you know, somewhere between $100 and $200 billion worth of in-ground material. And we've got the expertise and the know-how to actually monetize that. We've got a very aggressive program over the next year. Exploration target, we'll bulk sample it, run it through the pilot, put out a mineral resource estimate and scoping study within 12 months. I got 8 seconds. So at the moment, we've got about 3.9 million in the bank. We're halfway through a capital raising. We've got an experienced board with excellent character and wanting to make it happen. And Chrissy's going to chase me off the stage. Thank you very much, ladies and gentlemen.